So we had a question about infinite banking. After you take out the maximum amount of loan against cash value of a whole life insurance policy to invest in syndication deals, is it better to fund the paid up addition to increase the amount of cash value in the whole life policy, or is it better to pay off the loan first? I think the important goal is to not lose the ability to keep overfunding, or the PUA, paid up addition. So some of these carriers, or some of the ways you configure it, are very inflexible. I'm actually very confused by this too, because I have 3 different policies, 3 different carriers, and 3 different really wonky restrictions I have to, or like circumstances I need to hit to not lose my PUA. So like one of them, I have to keep funding it every 2 out of every 3 years. The other one has some kind of 5-year look back. One of them is the most flexible, where I can just fund it whenever and just skip it. But a lot of this is in the Infinite Banking eCourse. You guys can get free access to that at SimplePassiveCashflow.com/banking. But that would be the first thing I would look at. How does the flexibility component look for that, for your policy? And this is where this becomes very personal, right? And you may not know like how your deals are cashing out, or your windfalls are cash, or your income at your day job. That's just, you're going to have the best idea on how to do this, and make the best judgment call to prioritize filling that PUA up first, right? If you're going to be able to hit the PUA next year and the year after, then maybe you might prioritizing paying off the loan. But because you're mentioning that, I think that's a big loopy mistake I see people, is they have this loan on their infinite banking, the whole life IBC, but then they freak out about paying off the loan. And I get it, like where it comes from. I think it's no different than like when you first got a HELOC on your home, there was like a payment occurring in the background, but you learned after some time that, don't freak about it, it's just there, right? Yeah, you're making money elsewhere at a higher frequency, higher rate, and that's why you're doing it, right? Essentially, we're arbitraging the money in here. But when we have the big windfalls of cash, this is a good place to put it. And the paid up addition, the way I think about it is every year or so you get another container, unless you don't start filling them up. And again, that was where I was mentioning all of them had different circumstances. Some policies are like you get another container for the next year, but unless you filled up last year's, you don't get another one. So that's where you have to look at your policy, and then you have to kind of forecast on what you're going to be doing in the future. I just speak from my own experience. Like I had deals cash out recently at the end of the year, and I was looking at my policies, and I had to do the insurance premium first. I guess that's the priority, right? You got to do the premiums first, which is usually a very small amount, unless you're doing a jacked up infinite banking where the insurance premium is high. As a percentage, should definitely be like less than 30% of the premium, if not your guy's screwing you. Pay that first, then you have to look at, should I pay the paid up addition, or can you? I didn't realize it, but I owed pretty large sum loan. A lot of times they don't allow you to take out even more loan if you don't pay the premium. So again, yeah, pay the premium first, which should be a very small portion, should be pretty easy to hit that. But then the PUA next. And then so what I did, because my stuff is confusing with 3 of them, I made a little spreadsheet where I have the anniversary dates, and then I have 2021 insurance premium, 2021 PUA, and then 2022 insurance premium, 2022 PUA amounts, and then repeat that for each year for insurance premium and PUA. And then I also have a column all the way on the left side where I have my cash value, and I also have the outstanding loan. And this is how I go. This is my dashboard. I know that I'm paying off the premiums and paying into the PUA, but I may be also carrying a loan too. And that may be the smart thing for me based on my situation. So I don't know if it's beat it to death there, but if you guys want to dig into it, I'm open to doing a coaching call, but you guys got to record it, right? Like I say, you got to put it out for everybody advice. If not, just sign up for the family office group, stop screwing around, get around other people doing this stuff, and you start to learn this stuff through osmosis, and you start to build a peer group to learn this stuff. But with that, thanks for listening. Bye.
This website offers very general information concerning real estate for investment purposes. Every investor's situation is unique. Always seek the services of licensed third-party appraisers and inspectors to verify the value and condition of any property you intend to purchase. Use the services of professional title and escrow companies and licensed tax, investment, and/or legal advisor before relying on any information contained herein. Information is not guaranteed, as in every investment there is risk. The content found here is just my opinion, and things change, and I reserve the right to change my mind. Above all else, do your own analysis and think for yourself, because in the end, you are the only person who is going to look out for your best interests.